Welcome to Magic Indicator Strategies. In this video, we'll introduce a game-changing Heiken Ashi TradingView indicator that will blow your mind. This tool produces extremely accurate trade signals when combined with the triple exponential moving average. We tested this setup on Bitcoin's 5-minute price chart and couldn't find a single losing trade. It seems like we have found the holy grail trading strategy. You no longer need a bunch of confusing technical indicators on your chart to make money from trading. All you need is a smart way of using simple indicators like a moving average and the Heiken Ashi Oscillator. In this video, we'll teach you this amazing trading strategy that you can implement right away and make profits. This setup can be applied to shorter time frames like 5 and 15 minutes. It can also be used in higher time frames like 1 hour and even a daily chart. It works very well on cryptocurrencies such as Bitcoin, Ethereum, and Solana, on major Forex pairs and stocks. Traders, if you get to learn anything new on our channel, support us by liking this video. So, how should we install these tools on our chart? First, open the Bitcoin price chart on the 5 minutes time frame. Open the Indicators tab and search for Vervoort Heiken Ashi Long-Term Candlestick Oscillator by Lazy Bear. Apply it to the chart. This TradingView indicator is based on the Heiken Ashi candlesticks and incorporates several other technical analysis techniques, including triple exponential moving average and exponential moving average. This indicator aims to identify potential trend reversals and filter out the noise in price movements. In the indicator settings, we find a few customization options. We can change the TEMA and EMA length, which will affect the indicator's sensitivity. Signals are more frequent when the number is smaller. The candle size factor can also be adjusted. This affects how smooth the indicator is. Finally, we can enable the overlay mode, which transforms the indicator from the oscillator to colored candles. In our strategy, we will leave the indicator settings as default. It is very easy to read the Vervoort Heiken Ashi Oscillator. When the histogram turns green, this indicates a potential buy signal. When the bars turn red, this is a potential signal to sell. As for the second indicator, we will add 10 in one different moving average. Heiken Ashi created this tool. Next step is to open the indicator's inputs to add 2 more moving averages to the chart. The first MA will be set as EMA 200. The color will be dark gray. Enable the second MA as EMA 100. The color will be brighter. Lastly, check the third MA. Set it to EMA 50. Change the color to white. Next, go to the style and adjust the EMA 2 and 3 thickness. The 3-in-1 EMAs are a very powerful combination of moving averages that helps traders better identify a trend. When the price moves above the EMAs and the lines are positioned in the way, so on the top is 50, in the middle is 100, and at the bottom is 200, we can confidently say that the market is trending upwards. In an uptrend, only long positions can be taken. We will use the EMAs not just for identifying the trend, but also as dynamic support and resistance levels. The EMA 50, which is the fastest moving average, will be our primary support and resistance. In an uptrend, the 50 EMA will be used as support. In a downtrend, it will serve as resistance. Notice, when price gets rejected from it, the likelihood of trend continuation is high. Market consolidation is highly likely when price does not respect moving averages. You should not open positions during this market conditions. So, what are the entry rules for this trading strategy? Well, let me show you an example of a long trade. First, we wait until the price closes above the moving averages. The EMAs should then be positioned like this. The price should retrace to the 50 EMA. During the retracement, the candle bar must not close below the moving average. The Heiken Ashi indicator must turn either flat or red during such a pullback. The moment the histogram turns green, we open a long trade. The stop loss for this strategy can be placed at the recent swing low or below the second EMA. Target at least 2 times the amount you risk per position. You can even decide not to close a profitable trade until the price crosses and closes below the 50 EMA. This way you can get the maximum benefit from the trend. The next buy signal appeared on the second pullback. During the retracement, the Heiken Ashi Oscillator changed from green to flat. The price did not close below the 50 EMA, which meets the conditions for a long entry. As soon as the indicator turned green again, we initiated a buy trade. With this trading strategy, you can be 100% sure that any trades during a range market will be eliminated. Now let's learn the rules for a sell trade. First, the price must be closed below all 3 EMAs. The EMAs must be aligned properly. Keep that in mind too. The price must find resistance at the 50 EMA. The Heiken Ashi Oscillator must turn from red to either flat or green. We open a short trade when the histogram turns red. This trade was also very successful. Let's take a look at a couple of more examples. Take a look at how well this strategy filters out the consolidation phase. No available setups found. The next long signal was given at the perfect timing. We could have bought at the retracement and made all this profit. Sometimes you have to wait a bit for a signal to appear. But since you can use this strategy on different assets, it won't take long until you find a valid entry. The following long signal found the same pattern in the price action. This pattern has a very high success ratio. You cannot spot it with naked eye. That's the reason we use indicators to better understand the market. Let's find a couple of more examples. Stay focused and make sure you apply the same rules we just showed you. You can improve this strategy by changing the indicator settings. Feel free to share your ideas in the comments. Look at this perfect sell setup. The price found a resistance at 50 EMA. The Heiken Ashi indicator then issued a sell signal. This signal had a bit of lag, yet still it turned out to be successful. The risk-to-reward ratio was 3-to-1. Now let's take a look at the last example. The price respected the moving average with perfect pullback. The indicator reacted by changing from green to flat. A few candlesticks later, we received a buy signal. By the way, traders, if you're looking to take your trading skills to a completely new level, we highly recommend checking out TraderEdge. This app will save you a ton of time and money. With TraderEdge, you can backtest and forward test any trading strategy and get valuable insights about it. The majority of new traders skip the backtesting phase. That's the main reason they constantly lose money. Backtesting is super important because it gives you confidence in your trading strategy. If you don't know how to backtest, don't worry. TraderEdge will provide you with a free backtesting guide that has a $100 value. In addition, if you sign up today, you will get a premium course on how to build a profitable trading strategy and 4 pre-made strategy setups with a total value of over $300 for absolutely free. Besides the backtester, TraderEdge has a library of the best indicators and trading strategies that have been proven to work. Sign up for TraderEdge 7-day free trial. The link will be in the description below.